Disney came out on top in its high-profile battle against activist investor Nelson Peltz, ending months of uncertainty over who will sit on Walt Disney's board. The entertainment giant saying Wednesday at its annual shareholder meeting that the current Disney board will remain intact. After 75% of retail shareholders, they voted in favor of Disney's current board, according to a source familiar with the situation. For more, we're joined by Doug Creutz, who is the TD Cowen Managing Director and Senior Research Analyst covering the media and entertainment landscape, and Yahoo Finance Senior Reporter Alexandra Canal. Doug, great to have you here with us this morning. First and foremost, just want to get your reaction. Are you at all surprised by what we saw?
No, I would have been shocked had Peltz or Blackwell's won. I think they just didn't have a lot of vote. They had to convince an awful lot of shareholders to go with them. And I think, while they identified some things that Disney had maybe mishandled in the past, I don't think they had much in the way of a plan for the future that was particularly interesting. So no, I'm not surprised by this at all.
All right, so Doug, here we are today. What happens then next for Iger? We talk about what his priorities should be, obviously stemming some of the losses that we've seen within the streaming business. But from your perspective, what should be number one on his plate?
Well, from my perspective, I think Disney ought to be leading the charge to rebundle all the disparate direct consumer services out there together. I think that's the biggest issue that the industry faces, is that by leaving the bundle behind and going direct to consumer, you've created a lot of overhead, additional costs that didn't exist before, both in terms of acquiring users and also in terms of having to over-program your service relative to what programming you needed in the bundle before. I think that's the direction they should be going. We saw a little bit of that with the streaming JV, the sports JV they announced with Warner and with Fox. I thought that was a good sign. But it's a long way from getting back to a bundled product, which, by the way, I think in the long run will be better for consumers. It was great when you could pay $7 a month to get tons of programming and no advertising, but now increasingly these services are raising price aggressively, asking consumers to watch advertising. You're seeing major sporting events. The NFL playoff game recently was exclusively through a streaming product. A lot of consumers weren't happy about that. So I think getting back to a bundled product will help the industry and ultimately be better for consumers. I don't know that he views that as a priority, but I think that's what it should be.
And Doug, another big priority of Disney is succession planning. And that was a big thing, a big conversation amid these proxy battles. When it comes to the board moving forward, how much more pressure are they going to face post-proxy battle? Because this was very high profile. I would assume that now a lot more eyes are on this board to really deliver returns for Disney.
Yeah, look, they've been trying to figure out how to replace Iger for 10 years, literally. They thought they had a replacement in Bob Chapek, but he turned out not to be the guy. It's still not clear that there's somebody internally that's ready to step into the job. And I think to try and get someone externally is very risky, given that Disney has a very strong and unique culture. An external candidate might be a bad fit for that. So there is a lot of pressure on the board to find a successor to Iger. I think there was before Peltz raised his hand. I think there is after Peltz has moved on. And that is something that I think investors, I think right now, 2026 still seems like it's far away. So if you're investors, you're sort of looking at the optimistic outlook for earnings this year and some of the things Disney announced on their last call, like the sports JV, and can be excited about that. But as you get closer to 2026, that's going to be more and more of an overhang on shares.
What is the likelihood that we see Disney able to attain some of the goals that Trian has set forward that have now been made very public here, and that investors are still going to hold them to?
Well, I think the one that stands out was the idea that their streaming service should be at 20% operating margins, and it's currently losing money. The funny thing was, Trian's analysis suggested that was a cost side problem. But if you look at Disney's cost per subscriber today, it's almost identical to Netflix. The issue is that Disney's revenue subscriber is like 30-something% below what Netflix is generating. Some of that's because Netflix has been around longer and they've been raising price for longer. And I think it's also just has to do with differences between Disney's service and Netflix's service and who the target market is. I don't know that that's a reasonable goal anytime soon, unless they decide they're going to raise price by 50%. Even then, though, you might lose a lot of subs, and that's a risk too. So, I think investors don't expect 20% operating margins from the streaming service overnight, but they do expect meaningful progress to that goal. And I don't know that by 2026 Disney's going to they'll be profitable by that point, but I don't know that they're going to be significantly profitable by that point.
Doug, do you expect more activists to circle this company moving forward? And what happens with Peltz? Do you think he just magically goes away?
I don't. I mean, it's very hard if you're an activist to get a company like Disney, who's got a $200 billion market cap, to move. You have to, in order to own enough shares to make voting against the board a really credible threat. You have to buy a lot of stock, and that's very risky. Disney's a creative content company. They don't just make widgets, right? It's not just a question of raw sort of efficiency. And Disney obviously has identified that their creative output over the last few years has been substandard for them, and Iger is trying to address that. And I think he'll have at least some success. So no, I don't think you're going to see other activists get involved here, especially after this sort of resounding defeat. As for what Peltz does, I don't know. Maybe he just sells his stock and walks away and declares victory, because he has made a lot of money off of investment. The stock has gone up a lot in the last several months, in part because Disney has reported some good news. And he might have lost the vote, but if you make money, then that's still okay.